Let's get started, guys. Hey, this is Alex Chavez, and today we're going to go ahead and look at the stock market from my perspective. And I want to do a kind of conclusion to the week. What happened today, what happened this week, how did the stock market move? And I'm going to focus on four charts for you guys here today. I'm going to focus on the triple Qs, the Nasdaq, SPY, the S&P 500. I'm going to look at RSP, the equal weighted S&P 500, and I want to look at the VIX chart because I think these are all super important charts to look at throughout the day when you're trading, when you're trying to come up with hypothesis and trade ideas. I think these are really important to look at. So let's go ahead and look at it today. I had the QQs pulled up, but let's go ahead and look at SPY. All right, this is our bad boy SPY here today, and just so that you are aware, I am going to be charting today on Webull. Not I'm not sponsored, not yet. I'm just kidding. Yeah, so let's go ahead and take a look at it. I have SPY up today on the 5-minute chart, and I think we have Friday, Thursday, Wednesday, Tuesday, and Monday. I think this was last week. Yeah, that was last week, 9/12. Let's go ahead and just focus on what happened this week because we had a pretty crazy week, and I want to go ahead and let's just mark where we opened up this week because I think that's going to be really important for, just kind of getting a glimpse, getting a movement trajectory of what happened this week, right? And I think that's really important to look at. Where do we open this week? Where do we close this week? And let's go ahead and just chart here where we closed. And so the white lines here are going to be where we open, where we closed on the week. And as you can see here, we opened the week at 657. We pumped all the way up and closed at, what is that, 663.42. Just about, I don't even know if that's right. So where did we close? We closed at 663. So somewhere around here, 663.70. And if we come back here to the 5-minute chart, yeah, we open like right about there. So what did we do this week? What happened? We had a kind of a tumultuous week, right? We had Monday, Tuesday, Wednesday, Thursday, Friday. Wednesday we had FOMC. Jerome Powell came up and said, hey, we're not going to focus on so much inflation. I think he was really trying to stick to Donald Trump. Everything about the tariffs being a one-time price hike on the economy and for consumers and producers a little bit. He had mentioned that tariffs have primarily just been paid by producers at this time, but that he believed or that he had evidence. He really doesn't say who is saying this, but he's saying that they have strong evidence to believe that eventually producers are going to pass on the full cost of the tariff to the consumer, which is going to be everyday Joe Schmoes like me and you. And so all that to say, Powell's a little he's using very neutral language and a very neutral positioning that he wants to put the Federal Reserve in as they react to the economy. He said since the beginning of the year up until now, they've been primarily focused on inflation, keeping inflation down, and they don't know exactly what's going to happen. They didn't know what was going to happen in inflation because of Trump's tariffs. I don't think anyone knew. And since the beginning of the year until now, what happened is we saw decent job growth, decent job openings, relatively low unemployment. And so there's really no need for the Federal Reserve to, focus any of their time and attention and policies towards the labor market. The labor market was healthy. And I think that was kind of confusing for a lot of people, especially Trump coming in doing these tariffs, is that, hey, we're going to see companies that can't really afford to pay the tariff, they're going to go out of business. This is leading to small business closings. This is leading to people being laid off. How are businesses supposed to budget around a tariff that's always moving? One day it's 10, 15, 20, 30, 40, 50%. I don't even know. It was a lot of numbers to look at. I'll leave it at that. And so what happens, a lot of people got laid off. We weren't seeing that in the data. And what's crazy is that even the Fed didn't see this coming, as a lot of job revisions were being, a lot of the job data that the BLS was reporting is being downward revised to a great scary extent to the Fed now felt that they had to quickly react to support the labor market and support the economy and trying to stimulate some job growth. Powell said, we're still not worried about, we still have relatively low unemployment, but the pace at which jobs are being created and opened is a little alarming. We're not in a full blown recession. He still said I think they're projecting 1.5 GDP growth for the next year, which is good. I mean, it's a lot lower than what we had last year, but nonetheless, all this to say, this is what happened Wednesday. And that's kind of why the markets were, how do we say this? The markets react really good because we've got a quarter basis point cut. They're going to drop rates. Essentially, they're going to use their tools to drop rates by a quarter percentage point, a quarter basis point, and markets love that. What also they happened is they said that they're on track to do a couple more rate cuts this year, next year, to eventually get around a 3% interest rate by 2020, late 2027, early 2028. And I think, he's saying we're not dovish, we're not hawkish, we're just positioning ourselves in a place to react to the economy and what the economy needs. Do we need to cool down the economy? Is inflation going to spike back up? Or is unemployment going to spike? What's really going to happen? I think, again, as Powell has been saying, we're waiting for the data. We need the data. We're data driven independent agency of the government, which is I think amazing. Okay, so let's go ahead and look at what happened. So we opened the week. Oh, didn't even see that. So we opened the week up over here at 657. For the most part, I think we traded really flat. I mean, we traded really into this. We stayed in this area here, and imagine this didn't happen yet in the day. In the week, we pushed 660 in the pre-market on Tuesday morning, and the market sold off. Yeah, we sold off. The market sold off. I'm adjusting. Hold on. Yeah. So yeah, hopefully I sound a little better. So the market sold off Tuesday morning, and we still held that opening weekly price 657. The sellers or buyers came in and really held up this area 657. I think that's a worthwhile price of noting. We touched it a couple times Monday morning and especially in the afternoon session here. In the morning session of Tuesday, we came back, tested that area. We had a little nice bounce off of it. Looks like we jumped off of it twice. This is the 5-minute chart, so it might have been a couple more times, and then it looks like a third touch of the day. And then again, we saw price just really contracting. We weren't really making any moves higher. We were just really contracting. And so it's everything boiled down to Wednesday. Again, we broke down around this area that we had opened, the weekly opening price to 657. We dumped a little bit. We came down to 656. No biggie, just $1 off. Then the rate cut happened. The announcement happened. Powell spoke. We pumped. We dumped. We pumped. We dumped. And eventually we just pumped, because this is when Powell was having his closing remarks and said a lot of what I had already said previously early in the video. And so we ended on a good note, a really good note. A lot of people are very happy. Obviously, when interest rates come down, there's less incentive for big money to park money in risk-free investments, and that's what treasuries are. They're risk-free investments. There's hardly any risk associated with them, and you get the guaranteed 4 or 5%, depending on what maturity date you're going to look at. And so, obviously when we have lowering interest rates, we're going to see a lot more demand for money to be flowing into the market. If I'm only going to get a 2 or 3% guaranteed return, maybe I'll go roll the dice and throw it in the S&P 500, and hopefully I get a good spanking bullish year where I get 12%, 3 times the risk-free rate. Obviously, it's going to be coming. It's going to come with risk, investing in equities rather than looking at the bond market and fixed income. So let's go ahead and look at that. So I thought we had a crazy day. We had highs of 659 on Wednesday, all the way down from 652. About a 7% move. And we look at that in proportion to the price of SPY. I think that was like a 1% bounce, and that's kind of a lot to move SPY in one day. Market closed and we saw a pump. We pumped all the way up until Thursday morning, and then we dumped off. We sold off again, and that's what happened. At one point in the week, I think what happened was, I think this sell off right here was heavily attributed to the fact that China released some data or an announcement saying that they're going to start restricting sales of, or they directed their technology companies to stop purchasing NVIDIA chips. Market didn't like that. NVIDIA didn't like that. We could look up at NVIDIA, but I think it shows pretty well here on the SPY chart what happened. Market sold off. Big share of, and I shouldn't even say, I don't really know the percentage, but I know it's a big percentage of their revenue comes from selling chips overseas to foreign countries. And obviously we had chip restrictions from our own government on our own U.S. chip makers, and then I think Trump to solve that, and so we had a little bit of rally previously in semis, and obviously this news came as a big blow. We dumped off a little bit, and again we came here and we kind of caught around this price area 658 of where the market had already been moving up and down. Quite a notable price area here. I mean, we could chart this. I think it's kind of worth it to look at. We'll go ahead and do this one green. It's not an opening or closing price. It's more of a support level, more of a demand level, I should say. And because, we saw the market stalled out at this price, 659 earlier in the week, on Monday, Tuesday, a little bit into Wednesday, all day Wednesday, we kind of chopped around this 659. And so when the market finally broke up above it, the market usually always pulls back to a safety area, and that's what the 659 provided. But could have been a good place to put it, to make a short-term bet on a bounce, right? And that could have profited really well if you would have gotten the right contracts, the right calls. And then again, that day we just chopped. Looks like we just chopped all day. We didn't really hit back above our 663 that we had made in pre-market. Previously, this was all-time highs to us on Thursday. This is Thursday here. We had this wick of a candle up top. We really just got shot down, and we just chopped. It was a choppy day, and so with that, we kind of made this nice little base of 660, and the market reacted to that. The market just stayed in this up all the way up until Friday, all up until today. And, this create this nice little demand area again. And, a patient trader could have waited again for an entry back at 659, but I think a more ambitious trader would have made this trade here at 660, seeing that we had a couple touches on Thursday, pre-market touch, end of day touch on Thursday, for support, and then we obviously saw that area as a resistance level earlier on Thursday morning. So going into today, Friday, it was a big day. We had the quad witching, and obviously that's going to be a day where a lot of the derivative market contracts, futures, and obligations to purchase or sell a certain amount of products, equities, were expiring today. And so with that, if you're short some of these derivative products, you're going to cover, or you just exercise them. And that, so we saw that happen throughout the last part of the day. We stalled out. We stalled out earlier in the day around this area, and I'm going to go ahead and put this. I like to look at zones because price lines are sometimes very ambiguous, but a zone is a zone. And so this zone here was about 662. I'll say is the average of the zone. And it was going to be the topping price of our chart on Thursday. And then again, we instantly rejected that when Friday opened. We ran up all Friday morning, and the market opened, and we dumped. First 10 minutes of the day we dumped, and we printed this solid 662 high of day on on Friday today, and then we came back up. We tried testing it again, and would look at that. We couldn't do anything. And then again, we made the bounce back down here to the 660 level, which I said some ambitious traders probably did take, and then we came up and we chopped. There was really not a lot happening, and this is really digging into the weeds on the day here. Let me delete that because I meant to just do a little trend line so I can show you guys that market conditions were relatively compressing. We were compressing. We had made this big monster move up. I shouldn't say monster, it was like a $2.50 move up, and then we just chopped. And so in the last hour of the day is when I think I'm going to assume I'm going to use my investing brain. I'm going to say, hey, the week's about done. A lot of these options are going to expire. Futures are going to expire. A lot of obligations are going to start to happen. And at about 1500 hours here is when we really saw a big spike up in price action. We didn't see a lot of volume tick up until like really the last, I would say, 10 minutes of the day here is what happened. And so yeah, we absolutely ripped through that level, that 662 level, and at this point I think we had made all-time highs again. Yep, we had made all-time highs, and actually in a trading session and not in the pre-market session. So after the market broke past the 663.42, we just absolutely ripped up. We ripped, had a little bit of pullback, and then we ripped back up again. And again, this 100% had to do with quad witching, a lot of buying happening, a lot of exercising of options, a lot of selling of options, a lot of just demand in the market really is what happened. And then eventually, we hit that 664.55, and that's our alt SPY's all-time highs. Obviously, we didn't close up there. We closed down here closer to around 663.70, which is still pretty close. I mean, within a dollar, about 80 cents away. And that's really what happened. And so when we're going into the next week of the trading market, in the trading week, I think it's really important so that we look at what happened. And, we had a lot of contraction in the market and we had a lot of expansion. I think really the FOMC meeting really just put a lot of people on edge, and, what's going to happen next. Obviously, the equity markets are really pumped up for those lower projected interest rates. And that's really if we continue to see inflation, steady. I mean, we're close to 3% inflation month over month, which is not that bad. I mean, it's pretty close to the Fed's 2% target. But I think we're going to still continue to see some softening or weakening of the labor market. But again, it's going to have to come from data. And again, that's just what Daddy Powell's talking about. So let's zoom out a little bit. This is the 5-minute chart. I think we kind of beat that to death a little bit. Let's look at the chart. Let's look at what's going to happen. So we have Monday, Tuesday, Wednesday, Thursday, Friday. We have about 5 days. And so Monday, Tuesday, Wednesday, Thursday, Friday. Can we predict what's going to happen in the next trading week? I don't know. I really don't know. But I think it's worth a try. So first thing I want to do, let's look at our previous week. We had this area right here, the 652, where the FOMC pulled back to. Genuinely, this is a very valid print of where the FOMC pulled the market. We saw that there was willingness to sell all the way down to 652. And again, that previously marked a previous high in the market, 652, back on November 10th. So nearly 9 days ago. I think we may, if anything, we might push down to this level. It's really far down. I will say that. But we also have this little area of confluence here where we saw that first dip in the FOMC meeting, and then we also saw some accumulation, some flattened trading here. Not very exciting to look at, but it was there. And so begs to ask the question, we're at all-time highs. This is essentially $10 away from our all-time highs. Do we pull back here, or are we going to see euphoria in the market? Are people? I think at this point we're seeing a lot of FOMO in the market. Markets making highs every single day, and so I think that's really interesting to see a lot of people just FOMOing in. I got to get in. It's going to make another high tomorrow. It's going to make another high next week, the week after, next month. And this is scary. The famous quote in the stock market is, be fearful when others are greedy, and be greedy when others are fearful. this is full blown agreed. 100%. But again, it is rationalized by the fact that we're going to see massive rate cuts in the next year or two. They're going to get down to 3%, hopefully by the end of 2027. Starting 2027, I'd have to look at the dot plot, but just really interesting is that we could see markets really pump, on this easing of borrowing. It's going to be cheaper for big businesses to borrow. It's going to be cheaper for them to expand their business. It's going to be cheaper for them to hire. It's going to be cheaper for them to invest in themselves and in their production and in their revenue, which I think will be really interesting to see what happens. So the market is pushing up on valid projections, and so I think that's really interesting to see what's going to happen. But so when we get into the week, I definitely could see us making another high. We could definitely come make another high. How high can we go? You tell me. I really couldn't tell you how high we're gonna go. We'd have to start looking at some implied moves of where we see the market opening and closing. I mean, we could look at some of the options about where traders reaching out and really selling their call positions, their call contracts of where they don't predict the market going higher. I don't have that pulled up on me right now, but next time we make the video on Monday, we can look at where there's a lot of open interest on call contracts, and that's really a big tell of where these big players are betting that the stock doesn't move past. And so we'll look at that Monday. So let's see. I'm gonna go ahead and let's draw some more here because I think it's fun to draw. Fun to draw around these areas of confluence of where the market had moved. And so we get here, we could definitely pull back to 660. And the market really is just gonna do what the market does, really. And I think as traders, our job is to expect where the market is headed. I mean, we really can't predict where the market is headed, but we can expect to make an action or a trade when it comes to levels that we're comfortable with purchasing at. And so I really haven't chased the market here at all. It really hasn't came down to a price that I am comfortable purchasing at. You can see my little greedy lines down here, 640 and 634, of where I would personally like the market to pull back and before I load the boat. And so, but if we're trading the 5-minute chart, if we're trading the 15-minute chart, even here on the hourly chart, I think 660 is a very valid area to start entering some positions and defend that position all the way up to 659. And if we break past, I think I would just have a very tight stop loss right here below 658. And look for the downward move to 654, 655. I wouldn't want to be holding any calls through there, but I think this is a nice healthy area to look at a dip buy. Genuinely the market could here, we could in theory pull back. We could even pump up a little bit from here. So that's a trade idea that I would be waiting for and looking at. Is really looking for a bounce between this area before we make another high. I think that's best case scenario is we see a little healthy pullback in the market. I don't see a lot of really good, decent areas for the market to bounce off of up here. I mean, you could make the argument that, hey, what about 662? We stalled out around here all day. Yeah, but that's being a little too bullish in my opinion. I think we have to have a very neutral standing point. I don't like to short the market. I don't think anyone should be shorting the market right now in these conditions. We are in a very, very bullish trend. Going all the way back to August 1st, when we had this low down here of 618, we are in a very, very bullish trend. And I would recommend and urge everyone who's trading this market here today or in general to remember the fundamentals of, I want to buy into strength and sell into weakness. And right now, the macro trend right now is, just all the way down. Let's look at this from this low to our current high. That's a solid line. And obviously this is not a line of best fit. This isn't a line saying the stock has to follow this line, but Could it? It could. Yeah, it definitely could. Let's draw that yellow. I like that yellow. It's really beautiful. It's a beautiful color. You can start drawing all these silly lines on the chart. But genuinely, this is what happened. The market pulled back to 618, and we pumped all the way to 664. That's a valid movement. That's a huge movement. And so obviously you can see here, looking back here, the market has bought up these dips. Every time we've dipped, the market has bought it back up. Why? Because of our macroeconomic conditions. The Fed is going to be a little dovish. Really, I don't think Powell wants to admit it, mostly because I don't think he likes Trump. But he's positioned himself to react in a dovish way. He's willing to save the markets if the markets need to be saved. And I don't mean the stock market. I mean our economy. So yeah, I don't recommend shorting the market right now. We are in a very bullish trend, and I don't think we should try to, short the top, because this is it looks parabolic. It is, but look how healthy all these pullbacks and rip ups and pullbacks and rip ups, and you could reckon, hey, we're tightening here. Our price action is tightening. If we even come back here, look at this. From this low to where we're at here, we're tightening. We had these bigger swings, and then we're condensing, and the market loves to move from a point of expansion to contraction. And so this begs the question, are we going to contract so much that we spring up even more? Or are we going to contract to the point, hey, we have a healthy, I don't even know, I wouldn't even call it healthy. What kind of pullback is this where, do we pull back? How far do we pull back? Is it rational for us to pull back? What big news is going to come out that could really make us pull back this much? Because if you're following anything in the news, it's good news. And so I want you to remember when we're looking at the charts, a lot of what happens in the charts is not technical analysis based. It's not. The charts don't move based on your little lines on the chart. They don't. They move on news and actual fundamental principles that happen, not technical analysis, fundamental changes in the economy, fundamental changes to our fiscal policy, our monetary policy, economic relations, political moves. That's what moves the market. And so your technical analysis is really just you trying to paint a picture around what's actually transpiring in the market. And I think that's, it could be a cool thing, could be a bad thing, but right now you have to admit to the fact that we're in a very bullish scenario. We are in a very good position to have the Feds cut rates, pump equities higher, and really look forward to a pumping economy. The more cheaper, or the cheaper that the dollar is to borrow from your bank, from institutions, means the more money there is for these big businesses to expand, to invest, to hire, and to hopefully create more profits and shareholder value. And that's what we're chasing. That's all the SPY is. SPY is a huge discount mechanism. And so, yeah, I think we could definitely make a pullback to 660. And I think there will be a lot of people willing to buy. I think there's going to be people willing to buy all the way up. Even if we get a pullback, we're going to get, all this is going to get bought back up. And so really, if we're looking at fundamental levels to buy at, oh my goodness, this chart's being a little finicky on me. I just want to expand the y-axis. Let's go ahead and delete these because I think those are a little silly. But if we're looking at a pure price action chart here, I think, yeah, we could definitely come back and pull back to 660, 658, and perhaps even 654. I would take a position here for calls, or if you want to do some leveraged shares, this would be a good position to catch a day trade. If we break this area, I still wouldn't short it, but I would wait for the market to pull back and see how we react around the 652 area to see if we get a bounce up, because I think that would be really interesting to see what the market does. And again, I think really our next projection will be based on what happens here, because if we make another all-time high, that would be insane. And I really can tell you right now where that's going to be. But I can tell you if we pull back and we buy into strength, and we buy into all these people willing to prop up the market. And I don't like the comment of prop up the market. It's the value of the market. They're valuing the market at 664 SPY. That's what they're willing to pay for their price of all this future growth. And I think that's amazing. So yeah, let's go ahead and look at Qs. I think we beat SPY up enough. Qs made the same point. I don't think I'm going to draw on this chart just as much, but let's go ahead and let's draw our little lines because I think price action lines are very cool. Like I said, so we have this little area here that we saw some confluence in. We saw a high, we saw a gap up, and we saw a pullback, and we saw a bounce. Same back here. We saw a high on August 10th. We traded flat, and we pulled back here during the FOMC meeting, and we ripped. No question about it. Q's ripping. Let's look at the equal weighted SPY because this tells a little different story than SPY, and I think this is very interesting to look at. And I want to look at this one on the daily because I don't want to see this stuff. Let's delete that. What's happening here in our little friend, the equal weighted SPY? What's going on? What are you doing here, buddy? He's doing a whole lot of nothing. He's failing to make all-time highs. SPY is pumping. SPY's pumping. The Qs are pumping. What does that mean, though, when the equal weighted is also not pumping? It means that we're probably heavily pumping in tech. We're heavily concentrated in tech. The Magnificent Seven. You know, we have Apple pumping. We have Meta actually is pulling it back a little bit. Amazon's pumping. Nvidia's pumping. Microsoft's pumping. And we're seeing a lot of the tech stocks really outpace the rest of the market. Let's see if I could do a little chart here. And let's do a side-by-side comparison. And I'm going to look up XLK. We're going to do the ETF for the, let me delete this real quick because I don't like moving averages. Okay, let's look at this on the daily chart as well. What's going on here? What is going on here? Let's try to get these charts lined up as best as we can. Let's go to oh, I don't like the way that looks. I don't like the way that looks either. The hourly chart for the 5-day. I don't like the way that looks, and I think it's because I have both these charts pulled up together. Oh, I don't want to show you guys what I'm doing here. All right, let's just keep the daily chart pulled up because I think this offers a really interesting picture as well. Let's see if we could find where this area is here. We have 723, 723. Let's find 723 here. Here's 723. 723 is right here. And so I think we can do our crosshairs the same on both sides right there. So from that low on both charts, you know, they both did make a low here, but look as we pumped up. They both pumped up, yeah, and they pulled back, and they pumped up, and they pulled back. And here's where we saw a very explosive move on the tech sector, technology sector in the S&P 500. And we really saw tech just explode from 269 to 279, a $10 move up. Insane. But the equal weighted S&P 500 really isn't doing much. So keep that in mind. We are heavily skewed towards tech leading the market as usual. I know. Like I'm saying anything new that you guys don't understand. Let's look at the VIX. VIX is super important to look at. And I want to pull this up to SPY because I think this can really influence what we're going to do, what's going on. SPY is best look at on a daily, I want to say. I think this is an adjusted chart, which I don't like. But here, we've based out here on the 14, and so when we see a lot of people positioning to defend a lot of positioning into options, specifically put options, we see volatility spike. And so, you know, right here when we had this pullback, let's look at the hourly chart. And it's not always the case that I mean, yeah, you could make the argument that it is always the case that when SPY pumps, what happens with VIX? It dumps. And when VIX dumps, SPY pumps. And when VIX pumps, SPY dumps. Not rocket science, but sometimes it is. Let's see what happened here during the FOMC. We had this spike up from 14 to 16. You know, we did see we did see VIX spike in relatively to the week when FOMC happened, and then we dumped as markets continued to compress and really just trade sideways. Same thing happened here with VIX. We didn't see a lot of movement. And I think that's really interesting. I think if we start seeing the VIX spike up a little bit based on uncertainty, fear in the market, I think we definitely could see a pullback. I don't know if we hit $20 VIX again, but I think we could hit a like $18, $17 VIX. If we pull back to 650, would it be warranted? Perhaps, and I think it's something to look at. Oh, I don't want to make an order here. I think another important chart to look at is going to be the US dollar. So let's go ahead and pull up Dixie. Because Dixie has been dumping straight up. Dixie has been dumping. We have had a really weak dollar. But we did have a pump. We did pump. And I thought that was interesting to see that if we look at the hourly chart on both sides, look what happened during the FOMC. The dollar dumped, and then it pumped. And this is really interesting to see the dollar and the S&P 500 move at in a positive direction together. Usually, when the dollar dumps, SPY is going to pump, and vice versa. So I think this is really interesting to see what's going to happen, and I think we need to keep our eyes out for what does happen. This is pretty interesting. I mean, the dollar around 97 VIX, or I mean, Dixie is pretty interesting. Yeah, I mean, obviously we're not all the way down here to these $90 levels we were back during like COVID and especially here when we were cutting rates so aggressively, or starting to increase rates, I should say. Anyways, yeah, so let's go ahead and get back to our single chart, and we're going to end the day on SPY. So what's going to happen? You tell me. But I think let's position ourselves accordingly. Let's look towards what's going to happen. And I think that was a good, how should I say it? That was a good recap on the week ending September 19th. So we'll see you guys next week. Hope you guys have a good one. Peace.